Hello, today is July 26, 2025. As always, we'll start with our disclaimer. We'll go over our calls, make our prediction. It's the weekend. I want to review the long-term picture. This is my trading plan for Monday, which is July 28th, 2025. Remember, it's a plan. I can change it. I can be wrong. Trade at your own risk. On Friday, we looked for the pattern with the early high. We said unless we gapped and promptly overtook Thursday's high, we should trade down. We gapped up without any pullbacks. We promptly traded over Thursday's high. So the bulls did what they had to do. This is a review of what we said. We're getting kind of cautious on things here. We're not calling for reversal yet. I said if it happened, I could explain it, but it hasn't happened, and until it does, I'm just cautious here. These are the patterns we should see next week. July 28th is a Woodson turn date. It's also a date I've seen on the internet of some other market timers. Timing the date isn't my thing, but a lot of people have come up with the same date. Monday's pattern is going to have the early high. It's usually a rally day. If it fails, it's a straight line drop. During the day, we had the strong rally on Friday. It usually follows through. We had an ultimate buy signal. Everything's swimming along. MEJT said it's false. We're going to retrace and go under this line. We did. It isn't only a target, it's also resistance. Support, rather. It's also support. Now, usually, when you drop late on a Friday, that follows through into Monday. That's what usually happens. Monday's open. Doesn't mean that you close lower. But we're at support, and there's a wall into the close. The market's going up. I can't rule out gapping up. Regardless of what happens, I don't think this bull moves over, even though I think it's close. I don't think it's over. Big money isn't going to wait until late on Friday to throw in the towel. We've said for a long time that prices should trade about 230 points over this line as long as that line holds. It's held, so we still aren't at that place yet. We also have a channel here. We're interpreting this as a break of the channel and a straight line move back up to the channel. That's resistance. When you go to resistance in a straight line, it's hard to break through. So we might not get this extra 230 points. If you're going to break through, you really want to gap over the line. You want to save your strength till you come to resistance and then break through. So even though it's a strong rally, we have to be aware that we're at resistance. I'm changing my count here. There are two different ways I can count this. The reason I'm changing it is I had this as an A in red, B, and C for wave 2, and I had this in wave 3 or wave 1 of wave 3. If that's true, this should be a 5-wave structure, and I can't count it that way. I think it counts as a 3. And the first thing I want to do is to prove that you can have a rally like this even if it's a 3-wave structure. Then we'll come back and look at possible ways we can count this. Here's the long-term count. This was a strong rally. I know other people are counting this is 3 and this is 5. Any count which doesn't break any rules is fine by me, but this is a clear 3-wave pattern. I don't think there's any valid way to count it as a 5. People counting it as a 5 are calling this as 1 of 5. They're counting this as 1 as 1. Oh, it's a 1 of 1. And if this is 1 of 1, it should also subdivide into 5 waves. And they're counting 1, 2, 3, 4, 5. So far, so good. But this is a weekly chart. Let's look at the daily chart for what they're calling wave 1 of 1. Right here at the low in in 2009. This is the count. I mean, that's your A. If you're counting this as a 5-wave structure, where's your third wave? I mean, that is not a third wave. That's not an impulse. This thing is overlapping. I mean, there's your A, there's your B, 2 possible ways to count C without breaking any rules. But counting this as a third wave is not going to fly. Where's your third wave? I mean, if that's 1, then that's 2, and that's 3, it's a 3-wave structure. It's not, you can have a strong rally and still be a 3-wave structure. And that's what we had here. This count enabled us to call this low to the day and to the penny within 3 decimal points. I'm convinced this is wave 1, and the only question is how to count wave 2. Is this 2 or is this A of 2? Or one other count that will show. Well, if this rally is a 5-wave structure, I just can't count it. But I can count this as ABC for A, ABC for B, and ABC for C of A. I can count A, ABC for B, ABC for C, and that's B. Now we're in wave C. I'm not convinced it's over. These are possible places for it to end. We overshot the 63.76 by a bit too much for me. If we drop right from here, I can explain it, I'll say fine. But the next higher target I have is 64.7821, where C has a relationship to A. And the 60, at that price, which is right here, for C, you would have A, B, this is 78.6. And C, it's the same price. What happened there? That's 100. And that's 78.6 at the same price. So all the waves balance out with this count around 64.7821. Now, if that's true, then this would be A, ABC for A in gold. B would be 64.7821, and then C would have some kind of Fibonacci relationship to A, and this gold A would be a pretty big drop. But that's not the only way to count it. What if this A is correct? And this is another A of B. If you set this as A and this is B, your alternate count, your wave C is 100, ends up at exactly the same number, around 64.78. So if this is A, and this is your ABC ending in 64.78, the wave C would have a relationship to this wave A, which is a lot smaller than gold A, and that's a more acceptable count to me, but neither one of those breaks any rules. So if we are going to hit that number, and if we are going to hit around 230 handles over this line, that would happen right there about Monday or Tuesday of next week, which is the date other people came up with. Monday's pattern has the early high regardless of where we open. Typically, it's a bullish day with a high in the final hour. Failures, a straight line drop. Sentiment indicators of reach levels compatible with a significant top, which could begin at any time. I mean, if we just start dropping right now, I can explain it. You don't have to get my numbers, but when they're like this, you're not always going to get everything you want. We gapped up at a higher high but closed under midday highs, and if maintained at the open, it should lead to lower prices printing, but not necessarily a lower close. One possible scenario is that Friday's late weakness usually carries forward into Monday's open, a weaker open, but we could gap up instead. I just can accept either one of those things. It's unlikely big money waited till near Friday's close to begin selling. I think any lower opening is going to reverse and new highs are going to print early next week. There's great wave balance at 64.7821 cash. Doesn't have to be hit exactly, obviously, with a plausible top near that price early next week. Once the reversal starts, we should be in a wave C of 2 down, and it could take us significantly lower before the bull market resumes. So it's the pattern with the early high, either a rally day or a straight line drop. What I'd like to see is one more rally, a strong rally up to that price we had in the 6400s. But after that, I think the ball game could well be over. All the wave count balance out, the time balance is out, and there could be a drop, could be several hundred points. And that's today's call.